Hi everybody, welcome back to the channel. This is the trading channel. If you are new here, you're welcome to the channel. So in this video today, I'm going to be showing you in detail how I take a trade. So if I don't see these 5 things, I don't trade. I don't trade without the presence of these 5 things. So I'm going to be showing you how to identify these 5 things before taking a trade. Just get right in, and also I have a tip I want to share with you at the end of this video, so make sure you watch this video to the end so you don't miss out on the tip. Carrying out multiple time frame analysis to the higher time frame and also to the lower time frame to understand the movement of price. So the first thing I do when I open a chart is to identify the movement of price in the market. So now we have a bullish structure here. This is a bullish market, and we can say the market is bullish when price moves upward. So I'm going to be using these patterns to show you guys how it looks. So this is how a bullish market looks from the chart, but let's just draw it out so you can see clearly for yourself. The next thing to identify now is our breakout structure. So because this is a bullish market, we have our breakout structure upward. So our breakout structure in a bullish market is the distance from the higher high to the low of that high. So you can see this is our breakout structure using this diagram to demonstrate. This is our breakout structure. So that is the second thing I do in the market. And then we are going to go back to the charts and mark out the breakout structure so you can clearly understand what I'm saying. So I will clear out these things now, and then take our arrow tool and mark out the breakout structure, the distance from the higher high to the low of that high. You can see breakout structure is an opportunity. And also note that the reason why this is a bullish market is because we have multiple breakout structures to the upside. So we can see this is our first breakout structure. This is an external breakout structure. Now let's take our tool and identify our second breakout structure. This is our second breakout structure. I'm going to be identifying all the breakout structures here so you can clearly understand what I'm saying. This is our third breakout structures as well. And then we have another breakout structure there. This is our fourth breakout structure, our fourth external breakout structure here. So now I'm going to label it out for you. Breakout structure is very important because it helps in setting stop loss level and also provides trading opportunities as well as confirm the strength of a trend in the market. The next thing is our order block. Order block represents a significant level of interest in the market because that is our entry point. In a bullish market, an order block is the last bearish candle after your breakout structure before price starts going upward. The last bearish candle after your breakout structure is your order block. Let's mark out all the order block you can see in this market. So your order block is the last bearish candle after your breakout structure before price start going upward in a bullish market. So these are your order block. Order blocks indicate areas of high liquidity, flow of price in the market, and also help you plan your trade. Bearish candle before price start going upward. You can see the last bearish candle before price start going upward. Here to the last bearish candle before price move upward. The same here, price move upward. This is our bullish order block. Labeling them out properly. This is our first bullish order block, and this is our second bullish order block. You know how to identify your breakout structure, and also you have learned how to identify your order block now in a bullish market. Now let's identify our fair value gap or imbalance in a bullish market before taking a trade. To be doing is to identify my fair value gap or my imbalance. My fair value gap is a space between 3 consecutive candles after my order block. So you can see, let me widen it up, you can see the space between 3 consecutive candles after my order block. Now let's take it and I can show you. If you can see correctly, adjust it again. So this right here is my fair value gap. The space between 3 consecutive candles after my order block here. This is 1, 2, 3, and then this is the space between 3 consecutive candles. We have a wick here, and then we have a wick here. So my fair value gap is taken between this first wick and this last wick. The space between this first wick here and this last wick here. You can see that is my fair value gap. Let me take it out so you can see clearly. The space between this wick and this wick is my fair value gap. So I'm putting it here. So this is my fair value gap. The space between this wick and this wick is my fair value gap. So you can see. So the reason for fair value gap is because of price coming to fill in the gap. So you can see price came down here to fill in the gap and as well as tap my order block. So that is the purpose of fair value gap. So you can see here is my fair value gap. Let's label it fair value gap. The next thing I do is to identify my liquidity. So my liquidity is on where price failed to tap an order block. So liquidity is also referred to as money because these are my liquidity. This is my liquidity. I'm going to take my trade tool and then mark it out. I'm going to be labeling it with money. So these are my liquidity. You can see this is how I take my trade. So after identifying my break of structure, my bullish order block, my fair value gap, my liquidity, the next thing I do is to take a trade. Now this is my long positioning tool. I'll take my long positioning tool and then take a trade. If I'm taking a trade, I'm targeting the recent high. So this is the recent high here. And then this, I'm making sure there is a space after price hits my order block. Should be a case where price is trying to come down a little bit before going upward. Price won't take me out. I'm still in the trade because my stop loss is here. So this is how I take a trade. Thank you, and the next video I will be telling you how I take a trade in a bearish market. So let me just give you guys a little tip. I promised to share a tip with you guys at the beginning of this video, and here is a tip. I'm doing that now. I am keeping to my promise. So I just want to share with you guys something very important. So you can see the reason why my tip is here is because this is a change of character here. This is a bearish order block here. So price can come here, tap this order block here, and then I'll be expecting a reversal. Because if market respect this structure here, price will come here, tap this order block, and then there will be a reversal here, and markets and price will come down. Excuse me. I'll take my short positioning tool and sell from this level. And price will come down here. I am placing my TP here where price tap my order block, and then adjusting my rectangle as well as my stop loss so we can have a neat
chart.
So come down here. So now you have learned how to take a trade in a bullish market, practice it, and then if you have any question, just let me know in the comment section. But I need you to give yourself an assignment and practice everything you have learned here today, and I'll see you in my next video.